Silver might be the most undervalued asset in the world right now. And almost no one is paying attention, because while investors are busy watching stocks, real estate, and even gold, something unusual is happening quietly inside the silver market where demand is rising fast. Supply is tightening and prices still haven't reacted the way they historically do before major moves. Which raises a serious question that more people should be asking today. What if silver isn't just another commodity, but one of the last overlooked opportunities before a global shift in energy, technology, and money starts pushing it much higher than most investors expect? And if you want to understand signals like this before they become headlines, take a moment to like and subscribe, because these early trends often matter most before everyone else notices them. For years, silver has lived in gold's shadow, often treated like a smaller version of its more famous cousin. But silver is not just a store of value, it is one of the most important industrial metals in the modern world, used in electronics, solar panels, electric vehicles, medical equipment, and advanced communication systems. Which means its future is connected not only to investor behavior but to the future of technology itself. That creates a powerful difference between silver and most precious metals. Because while gold mostly responds to fear and currency uncertainty, silver responds to both fear and growth at the same time, making it one of the few assets that can benefit from economic expansion and economic stress simultaneously, depending on how conditions change. Right now, industrial demand for silver is rising faster than many people realize, especially because the world is moving rapidly toward electrification, renewable energy, and high-efficiency electronics. And silver happens to be one of the best conductors of electricity on the planet, which makes it extremely difficult to replace in many applications even when prices rise. Solar panels alone are becoming one of the largest drivers of silver demand. And as countries accelerate their transition toward clean energy systems, millions of new panels are being installed every year, each one requiring small but essential amounts of silver that add up quickly across global infrastructure projects. Electric vehicles add another layer to this demand story, because modern vehicles rely on advanced wiring systems, sensors, and battery technologies that require more silver than traditional gasoline-powered cars, which means the transition toward electric transportation is quietly increasing long-term pressure on supply. At the same time, something even more important is happening on the supply side of the market, because unlike gold, most silver is not mined directly from dedicated silver mines. It is produced as a byproduct of mining other metals like copper, zinc, and lead, which means silver production cannot easily increase just because prices rise. This creates a structural limitation that many investors overlook because even if demand increases sharply, mining companies cannot simply double silver production without expanding entirely different mining operations first, which takes years, not months. Over the past several years, global silver supply has struggled to keep up with rising industrial demand, creating a quiet deficit that has not yet fully appeared in market pricing, but continues building pressure beneath the surface of the system. Historically, when supply deficits persist for long enough, markets eventually react quickly rather than gradually. Because once investors recognize the imbalance between availability and demand, prices tend to adjust faster than expected. Another reason silver may be undervalued right now involves its historical relationship with gold, known as the gold-to-silver ratio, which measures how many ounces of silver equal 1 ounce of gold. And throughout history, this ratio has often returned toward lower levels during major silver bull markets. Today, that ratio remains elevated compared to long-term historical averages, which suggests silver may still have significant room to catch up if investor attention begins shifting back toward the metal again. There's also a psychological factor shaping silver's current position, because many investors remember past price volatility and assume silver is unpredictable or risky compared to other assets. But volatility sometimes appears strongest right before long-term trends become clear rather than after they begin. In previous market cycles, silver has moved slowly for years and then suddenly accelerated in relatively short periods once demand, sentiment, and supply conditions aligned at the same time, catching late investors by surprise while early observers were already positioned. Central banks do not hold large reserves of silver the way they do with gold, which means silver's price is influenced more by industrial demand and private investment flows than by official monetary policy decisions. And this independence can create unexpected price movements when investor interest increases rapidly. Meanwhile, inflation concerns are quietly returning to the conversation across many economies. And when inflation becomes persistent rather than temporary, Investors often begin searching for tangible assets that cannot be printed or expanded artificially by central banks. Silver has historically benefited from these moments because it combines monetary characteristics with industrial usefulness, creating a unique position that few other assets share. There is also growing interest in silver among younger investors who are becoming more aware of supply constraints, renewable energy demand, and long-term currency uncertainty, which could gradually increase participation in the market over time as awareness spreads. Technology itself is adding another unexpected layer to silver's importance, because advanced computing systems, artificial intelligence infrastructure, and next-generation electronics all depend on high-performance conductive materials. And silver remains one of the most reliable options available for these applications. This means the metal is not just part of the past monetary system, but also part of the future technological system at the same time, creating a rare overlap between history and innovation that investors rarely see in a single asset class. Even small shifts in investor sentiment towards silver could have outsized effects because the market is significantly smaller than markets for stocks, bonds, or even gold, which means relatively modest increases in demand can move prices more quickly than expected. That smaller market size often works quietly in the background until attention suddenly increases, at which point price momentum can become difficult to ignore. Another overlooked factor is how physical silver inventories have been declining in certain regions, while industrial consumption continues increasing, which suggests the balance between available supply and real-world usage may already be tighter than headline numbers indicate. When markets begin recognizing those hidden imbalances, reactions are rarely slow or predictable, because pricing mechanisms adjust quickly once shortages become visible rather than theoretical. This is why some analysts believe silver's current position looks less like stability and more like compression, where pressure builds quietly before release. Especially as global infrastructure projects, electrification plans, and renewable energy targets continue expanding year after year. None of this guarantees immediate price increases, but it does suggest the conditions that historically supported major silver moves are quietly forming again beneath the surface of the global economy. And what makes the situation especially interesting today is that silver remains far less discussed than other assets despite its growing importance in energy systems, technology manufacturing, and long-term monetary protection strategies, which often happens right before attention begins shifting toward overlooked opportunities. So the real question may not be whether silver is moving yet, but whether investors are paying attention early enough to recognize what the signals are suggesting before the rest of the market starts reacting. And I'd really like to know what you think about silver's future from here, whether it stays overlooked or finally gets the attention it has historically received during similar conditions. So share your thoughts in the comments and send this video to someone who follows markets closely, because sometimes the biggest opportunities are the ones hiding in plain sight until the moment everyone suddenly starts looking in the same direction at once.